Oh shit, I need you to look at this screen right now because what I am seeing is a total powder keg waiting for a match. I remember sitting in a dimly lit hotel room just like this one, staring at a flickering monitor about 6 months before the Iran war kicked off. Everyone back then was obsessed with tech and high-flying growth, but I was quietly stacking oil stocks while the world called me a fossil. I didn't have a crystal ball or some secret insider line to the Pentagon. I just saw the big money moving in silence when the dust settled. I was up 60% on that play while the SP was bleeding out in single digits. And I made like 5 times more than the market just by watching the rotation. I am telling you right now, man, this software rotation we re-looking at in 2026 is going to be even bigger and faster than that oil play. The big money is moving from bucket to bucket at a speed that would make your head spin, and most people are still playing by rules written in the 90s. The truth that nobody wants to tell you on the nightly news is that Wall Street doesn't give a damn about quality anymore. They don't care about the CEO's vision, they don't care about the quarterly profits, and they definitely don't care about how many patents a company holds. That era is dead and buried. So peace out to the old fundamental analysis books because momentum is the only god Wall Street worships. Now, it sounds fickle and it sounds cold, but if you still clinging to that buy and hold philosophy your parents taught you, you going to get left behind in the dust. You be sitting there holding these great software companies making 0% while the NASDAQ screams up another 70% without you, or you play it safe with the SP and make a measly 2%, while guys like me are pulling 40% or 50% because we caught the rotation at the perfect moment. Look at the mismatch because the numbers don't lie even if the pundits do over the last 2 years. The NASDAQ 100 has absolutely exploded, tracking up about 70%. If you reholding the QQQ, if you drop 10 grand into the NASDAQ in 2024, you be sitting on $17,000 right now, which feels pretty damn good, right? But look at the biggest software companies in America, the backbone of the digital world. They didn't just grow slower. They actually went down, dropping about 8% in the same period while everything else was mooning. So instead of 17 grand, your 10,000 turned into 9,000 and some change. Your buddy who bought the index is out buying a new truck, and you wondering why the future of tech is failing you. How is it possible that software is dying while the rest of tech is hitting all-time highs every single week? The answer is a narrative that has gripped Wall Street like a fever dream. The smartest money in the world, these hedge fund guys with degrees from places you can afford to drive past, are betting billions that AI is going to kill every software company on Earth. They think AI is going to write the code, sell the product, and manage the customers better and faster than any human-led company ever could. It's a scary story. And hedge funds love a scary story because fear is the easiest thing in the world to sell. Just this year, those funds have made $24 billion betting that software stocks would tank. Think about that for a second, $24 billion on a single bet against an entire industry. When that much money piles into one side of the boat, the whole thing starts to tip. Everyone is crowded on the short software side, and the boat is getting dangerously lopsided. But here's what I've learned from years of watching these cycles play out in real time. The more crowded one side gets, the more violent the snap is when people realize they about to fall into the water. This video is about me convincing you that AI will or kill software, because honestly, the truth doesn't matter to our bank accounts. We are here to profit from the mechanical reality of what happens next. Investing used to be like planting a mighty oak tree. You buy a famous name, stick it in your brokerage account, and check it in 20 years. But today, the world changes too fast for that kind of romanticism. A company that looks like an oak today can be firewood in 18 months because of these rapid technology shifts. If you marry a stock today, you're likely to end up in a very expensive divorce. Wall Street has one simple rule that you need to tattoo on your brain. Follow the money. Don't marry the stock, marry the girl, and stay fluid with your capital. I am actually holding a free live seminar this weekend called Why Buy and Hold is Dead in 2026. And I am doing it live from France. You need to get a seat at buyandgrow.net because the old playbook 1T build your wealth, just preserve your losses. If you are in the chat right now, type seminar so I know you are actually serious about this because I want to teach you the rubber band effect, which is how we going to play this software gap. Imagine a rubber band being stretched as far as it can possibly go. The further you pull it, the more tension builds up inside that tiny piece of latex. Eventually, the pressure is too much, and it snaps back with way more force than the original pull. Software is that rubber band right now, and it is stretched to the breaking point. We don't need to guess when it is going to happen because we can track the positioning. Usually people betting a stock goes up and people betting it goes down are pretty balanced. But right now, the ratio for software is insane. Almost everyone is betting on the downside. And here's the kicker. Every person who wants to bet against software has already placed their bet. There aren't many sellers left, which means any bit of good news is going to send these shorts running for the exits. Have you actually canceled your Microsoft subscription lately? Probably not, because even if AI makes it easier to build a word processor, it is still damn near impossible to steal 1 billion loyal customers. The second step is what I call the crack. The first sign the boat is about to tip. I've been watching the XSW software ETF and it's been stuck in the mud since February. It hits a ceiling at 160 over and over again, like it banging its head against a glass floor. But when it breaks through that level, it sends a signal to every algorithm on the street to start buying that the moment the rubber band starts to slip from the hand that pulling it. And that leads to the third and most explosive step, forced buying, when the price starts going up. All those hedge funds who bet 24 billion against it start losing their shirts. To stop the bleeding, they have to close their bets. And the only way to close a short bet is to buy the stock back. They aren't T-buying because they love the company, they rebuying because they repanicked and they reforced to. This creates a massive rush of buying that has nothing to do with fundamentals and everything to do with mechanics. This move can be so fast it'll make your head spin, just like we saw with Avis. Now, I am not a financial advisor. I am just a guy sharing the research I got from my mentors on the street. The safest way to play this is the XSW ETF because it gives you exposure to 136 leading software companies. It's down 7% this year while the rest of the world is up, and that is a beautiful mismatch for an entry. But if you want to look at individual stocks, I've got 3 on my radar: CoreWeave, Big Bear AI, and Unity. CoreWeave is the backbone. They rebuilding specialized clouds for AI training. They aren't trying to be Amazon. They just building massive data centers packed with the GPUs that the AI world is starving for. If AI keeps growing, CoreWeave collects the rent. It's that simple. Then you've got Big Bear AI, which is down like 70% from its all-time highs. A lot of people think it's a joke because of the name, but they winning real contracts with the US military and federal agencies. When the defense budget starts flowing into AI, these small players get hit with a fire hose of cash, and then there's Unity. The engine behind millions of games and virtual simulations, it's been absolutely punished, down 87% from its peak. But it's bottoming out at a level we haven't seen in years. The gaming industry isn't going anywhere, and Unity owns the tools everyone uses to build it. You have to know when to sell and how to size these positions, which is why we're going to break it all down this weekend. The world is a mess right now, and the market is more volatile than it's ever been. But if you have a system and you understand the mechanics of how money moves, you have a shield. You don't have to be a genius. You just have to stop being a passenger in your own portfolio. Stop listening to the old school guys who tell you to sit tight while your account bleeds out. The speed of technology means we have to be faster, smarter, and more willing to pivot than our parents ever were. I want you to be the one who catches the snap, not the one who gets hit by it. Get your seat for the live session, keep your eyes on that 160 level on XSW, and let us get after it. I'll see you guys in France this weekend. It is going to be a wild one. Peace.